Hello and welcome to the weekly wrap video. Quite a few things to catch up on from the past 5 trading sessions then. Towards the tail end of the week we had quite a few risk events culminating in the non-farm payrolls release. This is seen as quite a strong number in terms of the actual headline, which came in just below expected at 192,000. It was just below the 200,000 forecast, however the prior was revised significantly higher, as was the case with the ADP employment change figures 2 days earlier. The unemployment rate, however, was unchanged at 6.7%, whereas the median market consensus was for a fall to 6.6%. This is due to the participation rate ticking higher to 63.2% from 63.0%. However, it is worth noting there were some weak points of this report, that being the average hourly earnings, which fell well below forecast, being flat for the month-on-month figure against expected an uptick of 0.2%. Some listed push out expectations of the Federal Reserve hiking rates by 25 basis points, so the futures market is now pricing this in for August of 2015 as opposed to broadly Q2 of next year. We did see upside in treasuries alongside US stock futures on the back of this report, pushing even the S&P to all-time record highs, ensuring a record open at the stroke of 9:30 New York time on Friday. Elsewhere though, on the ECB, we had Draghi's latest press conference. Despite some outside calls for monetary easing this week, the ECB kept all policy rates on hold. However, the presser was slightly more exciting as Draghi unveiled the fact that the ECB do still have a number of tools left on the table, and critically these were discussed, so that being the topic of quantitative easing, negative deposit rates, the end of SMP sterilisation, and even potentially the launch of any further long-term refinancing operations. How much of the focus has been on that QE tool, as reports in German press towards the end of Friday did suggest that the ECB had been running models to model just what the impact on inflation would be if the ECB launched €1 trillion of quantitative easing. So there's probably some further weakness in the euro currency, moving well towards multi-week lows, with Bund futures benefiting alongside peripheral stock markets. In terms of the focus for next week, this all lies on the continued digestion of this week's jobs report out of the US, as well as the beginning of earnings season as Alcoa, Wells Fargo and JP Morgan all report their latest reports. Of course, we'll bring you all of those as soon as it hits the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Make sure you have a great weekend.